We also see the possibility of the company producing 15 to 20 million cars each year. Boeing also higher, up 2.3% as the airline maker is pushing the 737 MAX fleet into service. Their CEO, Dave Calhoun, is joining the European close at 11 a.m., something to tune into. To the downside, though, Dollar General down 2%. They beat, but they're not providing guidance. They're not offering an outlook relative to the pandemic. Investors not liking the lack of clarity. The big loser, though, Splunk, down 21%. Their fourth quarter revenue guide missing the street estimate in a huge way, really highlighting the fact that some technology, nice to have, not doing as well in the pandemic as some of the need to have technologies, John.
Abigail, thank you. Thank you very much. Coming up on this program, Fed Chair Jay Powell looking for Congress to do a whole lot more. We'll be catching up with Marilyn Watson of BlackRock in just a moment. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
If bond yields start to rise too much in 2021, do central banks step in?
News around the vaccine, news around stimulus.
A better sense of the political landscape.
That really created a catalyst for rates to move higher.
If you move through 1% here, you kind of quickly go to 125 basis points.
The Fed will step in there if necessary.
I wouldn't view 1.25 or 1.5% as a sign that the Fed needs to step in.
The curve has been about as contained as it possibly could be.
The real question, though, is do bond yields stay low?
10-year Treasury is 79 basis points. Now it's, what, 15 basis points higher? Frankly, who cares?
I don't get the sense that they're eager to jump in at this stage of the game.
The odds are tilted against the Fed moving.
At the end of the day, the Fed is not moving off zero.
It's about keeping conditions accommodative.
A string of positive developments boosting market optimism, fueling a major breakout in long-dated Treasury yields, leaving investors increasingly debating whether the Fed will step in to adjust its program. Fed Chair Jay Powell promising to stay the course for now, saying we are going to keep rates low and our tools working until we feel like we're clearly past the danger to the economy from the pandemic. We're not considering pulling back any of our support. Joining us now is Bloomberg's Michael McKee for more. Mike, some confusion going into the meeting in a couple of weeks' time. What this Fed will actually do around the asset purchase program?
Well, of course, Jay Powell was talking about whether or not they would remove accommodation, not necessarily whether they would put more in. And what you think will happen kind of depends on what you think is happening right now. We know the curve is steepening, tends approaching the 1% yield level. That raises two questions. Why? And should anything be done about it? The answer to the second kind of depends on the first. Is the economy getting better? Well, the Fed's beige book yesterday suggested the opposite. But markets, of course, discount the present. They're looking to the future. Revived talk of potential economic stimulus, growing vaccine hopes. Powell's optimism for the year ahead in the two hearings this week have investors questioning that inflation outlook. They have been rebuilding the term premium, as you can see, the extra yield demanded to hold treasuries for a longer time. The 10-year break-even rate risen to 1.87%. That's the highest since May of 2019. It's up from 47 basis points in March, and that sent 10-year Treasury yields to a roughly 3-week high yesterday. They're off those highs today. It sparked talk of a change in Fed policy. Of course, at their December 16th meeting, the Fed's been buying about $80 billion a month in treasuries, but buying at the short end. So the question is, do they start buying at the longer end? Do they go out from 7, maybe to 10s and 20s? Almost all of that is up in the air right now with long rates rising. There is a growing belief they might do it, yet rates are still only testing their post-U.S. election peak from several weeks ago. Host of obstacles to a sustained climb. The economy is slowing right now. There's no question about that. Powell talked about it. Inflation measures fell in October. Congress repeatedly has talked about a stimulus program, but they've not been able to get one passed. Yields, at the same time, haven't been able to break 1%. And if they don't, it's hard to make much of a case for Fed action. And even if they do, would there be much additional stimulus value from pushing 10s below it? Mike Schumacher may have said it best in your opening there, John. If they break 1%, who really cares at this point?
Well, Mike, it's a good point. I will say, though, on communication, if enough people think that the Federal Reserve is going to step in, don't you think that provides a sort of air pocket at some point for Treasury yields to break out a whole lot more if they don't offer that kind of clarity? You know, this kind of dilemma for policymakers. I just wonder, Mike, how you think they'll navigate it in the coming weeks.
Well, I thought we might hear Jay Powell talk a little bit more about it in the last 2 days, and he didn't, although several other Fed officials have started suggesting they're not in favor of it. Rob Kaplan yesterday from Dallas saying he didn't think we needed to push down on long rates significantly more. They may wait until after we get the jobs report tomorrow to see what the economic picture looks like, or at least the environment for what they're going to do, and then start giving us some clues as to which way they think they need to go.
Michael McKee on the latest. Thank you, sir. Thank you very much. BlackRock's Marilyn Watson weighing in on the situation, on the future of the Fed and policy, writing the following: the Fed will continue to keep rates lower for longer, making bottom-up security selection key. We still recommend building a robust and diverse portfolio by holding income-generating assets with a risk-aware approach. Marilyn joins us right now for more. Marilyn, we'll get past all the jargon. I'll get straight to the point. If the Federal Reserve doesn't provide clarity on the asset purchase program in a couple of weeks' time, what happens?
Yeah, so I think, as Mike mentioned, I think that the meeting on the 16th of December is very much a live meeting, and it really does depend on several factors. So first of all, we're keeping a very keen eye on whether we do get some sort of further fiscal stimulus in the US, and I think that it really is up for debate. You know, we could get it by December the 11th, or maybe not, but I think that will be a key factor in their decision-making process. In addition, you know, obviously we will hear about whether they propose to taper. We'll hear a lot more about their forward guidance. And also, you know, as Mike mentioned as well, we will hear, hopefully, something about the weighted average maturity of the QE program. So there's a lot for the Fed to digest. And I do think it's going to be really a live meeting. And as you say, we have, you know, the jobs data tomorrow. And there's really, I think it really is going to be really sort of right up to the meeting, depending on what happens, in particular with the fiscal stimulus, you know, and other key events.
Well, Marilyn, let's build on that, on the final point you made there on fiscal stimulus. How important do you think it is for the Federal Reserve, when they formulate a decision to provide the clarity around the asset purchase program, to understand what the future of fiscal policy is actually going to look like, one, and two, will they even know the answer to that until after January 5th?
So, very good question. So first of all, I think it is very important in terms of the Fed's decision-making process. And, over the last couple of days, Chair Powell spoke about the fact that, they do need more fiscal stimulus. And a number of speakers have really emphasized how the pandemic has really impacted different areas of society differently. And it has really very negatively impacted the poorer areas of society and ethnic minorities. And so I think it really is very important for the Fed that they do see what's coming through in terms of fiscal stimulus. They want to see further support for various aspects of the economy, but particularly for low-income households, for small businesses. And I think what the package will be in terms of fiscal stimulus and when it is announced will have some very serious economic consequences for for next year and certainly for monetary policy as well.
Well, let's talk about the consequences for the Treasury curve. How important do you think the supply dynamic actually is to long-end yields, Marilyn?
So in terms of long-end yields, as you mentioned from the quote, we do expect that, yields will gradually rise in the Treasury curve. We're already seeing a little bit the past few days, but I think particularly going forward next year as well, we do think that the economy is going to continue to improve next year. We do think that GDP will increase. Obviously, we still have a lot of headwinds, and a lot will, depend on the rollout of the vaccine, as we mentioned, fiscal stimulus and other measures. But we do think that next year we will gradually see, rates back up, and we do think we'll see some form of steepening. We don't think it's going to be excessive. We don't think you're going to see some sort of sharp sell-off. But I think certainly for the back end of the curve, the Fed's, also emphasized they do want to keep rates lower for longer, and they're going to keep a keen eye on that. But overall, I think they just want to make sure that they have this relative stability. And you may see, the dollar, depreciate a little bit, and you'll see rates increase a little bit in terms of yields.
Marilyn, I was going through your outlook for 2021. Apologies for interrupting at the end there. A lot of people will come on this show and they'll say up in risk, down in quality for the credit market. They look for a more constructive year in the year ahead.
Yeah.
You don't seem to share that view. You're a little bit more nuanced. Why?
So I think, first of all, it's very important to focus on duration. And when you look at, obviously, the government bond market and treasuries, or you look at the investment grade market, then we have seen duration increase very significantly. I think for us, it's important to have a balance. So we still want to have, hedges on there if you were to see some sort of risk-off move. But conversely, also, we do think it's very important for investors to get the income that they need. So, we're focusing on certain areas of emerging markets. We do like high yields, and we do think that, you can get some decent income there. But it's important to also focus on the quality of those assets, on the volatility, and really understanding also the liquidity of those assets as well, because there is so much that is unknown, going into next year. And so for us, it's really important that you build a very robust and diverse portfolio. And so I think, for us, it's important that as they focus on liquidity, volatility, and really looking at all of our assets from a very much a bottom-up perspective now.
Marilyn, wonderful work as always. Always enjoy getting your perspective. Thank you. Send my best to the team at BlackRock, to Rick, to Jeff, and everyone else. Marilyn Watson there of BlackRock. Thank you very much. Coming up on this program, the analyst action you need to know. That'll be next in our morning calls. Then later, Wall Street starting to see signs of capitulation following a record-setting month of November. That conversation still ahead with Chris Harvey of Wells Fargo. As we count you down to the opening bell, equities at all-time highs. And an equity market this morning that is relatively unchanged on the S&P 500. The action is in the FX market. Euro dollar at new highs for 2020. This is Bloomberg.
सिर्फ और सिर्फ इस इलाके में
ड्रिप इरिगेशन सिस्टम की वजह से है और इससे हमारा मुस्तकबिल भी और इससे हम फ़ायदा भी ले रहे हैं।
तकरीबन 20,000 स्क्वायर किलोमीटर लैंड जो है वो अबंडेंट पड़ी है, जिस पे कुछ भी एग्रीकल्चर टेक्निकल तरीके से नहीं हो रही।
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
About 5 minutes away from the opening battle in a beautiful New York City. Record highs at a close yesterday. Will we add some weight to it? Unchanged going into the open. 24 hours out, 23 from payrolls Friday. Equities not doing much. We'll talk about foreign exchange a little bit later this morning. Let's get you some morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin first up with Goldman, upgrading Tesla to a buy. A huge upgrade to the price target. 70% higher, street high 780. The analyst citing the industry's accelerating shift towards EV adoption. That stock is flying this year. It's up on a session by 3.64%. The second call from Evercore, upgrading Square to an outperform. $300 price target. The analyst expecting the company to remain highly profitable, with consumers continuing their shift away from using cash. That stock higher by a little more than 2% in early trading. And your third and final call from the team over at JP Morgan, adding Whirlpool to its US focus list. The 237 price target. The analyst expecting to see a significantly higher level of earnings power following a strong third quarter. We're up there by a little more than 1%. There are three of the calls coming up. Signs of capitulation starting to emerge. Investors questioning whether the rally is getting long in the tooth. That conversation coming up next with Chris Harvey of Wells Fargo. And we'll take another look at that huge upgrade from Goldman after Tesla's massive rally this year. The opening bell's around the corner. The cash open around about 4 minutes away. Futures unchanged. Stocks at record highs. This is Bloomberg.
Risk out there, Francine, as you know, and
The pandemic swells the gap between the rich and poor around the world. There may be no starker case of inequality than Venezuela, where the socialist leader Nicolás Maduro has kept his hold on power by fostering a Darwinian dollarization under quarantine. The nation's mighty oil industry has collapsed. Water, electricity, and gasoline are barely available, and hunger hunts vast portions of the population. 4 out of 5 Venezuelans can't afford a basic food basket last year, according to a research by the main universities. Meanwhile, Caracas neighborhoods have a dozen new delivery services bringing to their doors everything from truffle salmon poke bowls to electronic cigarettes and $50 gluten-free birthday cakes.
give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
It has been one of the hardest things for an investor to do this year, to somehow divorce how you feel about what is happening in the world around you in the here and now from your outlook for the global economy and, to be more precise, for global markets. And there's something really uncomfortable about doing that, really uncomfortable, as we have the deadliest day in America for the pandemic at a time this equity market sits at an all-time high. Futures unchanged going into the cash open. There's your opening bell. Switch up the board and get to the FX market. The equity market at highs for the year, euro-dollar too, and that's been an elegant, delicate relationship through this year. Euro-dollar highs for the year, stocks highs for the year, lows for the year on euro-dollar in line with the lows of the year on the equity market. March 23rd for euro-dollar. 121.59 right now in the bond market. Yields getting a little bit interesting in the last couple of days. 0.93% is where we are on a 10-year. And in the commodity market, everyone on OPEC Plus watch, $45 on WTI. We pull back 0.4%. That's the story across asset at the market desk this Thursday. We can bring back in Bloomberg's Katie Greifeld. Hey, Katie.
Hey, John. Well, kicking things off, Tesla is making another run higher this morning after Goldman Sachs upgraded the stock to a buy and issued a street high price target of $780. That's about 30% higher for a stock that's already up 580% this year. But Waddle & Reed Financial is having an even better morning. Shares are surging nearly 49% after the money manager received a $1.7 billion bid from Macquarie. CrowdStrike is also in the green. It posted strong earnings after the bell yesterday and upped its EPS forecast. But Splunk did not fare as well. Shares are down about 24% after missing on revenue, and after JP Morgan, Stifel, and Mizuho all downgraded the stock. Now, also on the earnings front this morning, Kroger is down about 4% after missing on sales. EPS was better than forecast, but not enough to lift the stock. Dollar General is also dipping a little bit, unchanged now in early trading. Its comps and EPS both beat expectations, but the company did decline to issue 4Q guidance, citing those rising pandemic risks. And finally, Signet Jewelers is about 1.5% higher after posting a surprise profit. But the bad news is that 5-day Thanksgiving sales were down by low single digits. So we'll see if that weighs on the stock, John.
Katie, thank you. We'll catch up with you later in the hour. Katie Greifeld there on the latest price action. About 2 minutes into the session, equities up by about 0.1%. Energy outperforms by 0.4%. Consumer discretionary, industrials, information technology advancing as well. Materials in the mix up by about 0.2%. Katie mentioned that Goldman note on Tesla. What a call. They write the following. We're upgrading our call on Tesla to a buy from neutral and raising our 12-month price target to $780 from $455. We believe that the shift towards battery electric vehicle adoption is accelerating and will occur faster than our prior view. Is this another sign of capitulation? Another warning for equity bulls who continue to mount and face these valuations with near-term risks revealing signs of maybe that word, exactly that, capitulation.
You're hearing a lot of this talk about owning small caps and value and international.
It is much more about the reopening trade as opposed to getting through the winter.
Investors are repositioning portfolios to capture this cyclicality because they've largely missed it.
It's really their opportunity to shine.
There's been some capitulation.
The market has actually pre-baked the rebound.
We're in a seasonally very strong period.
Signs of euphoria in the U.S.
At some point, you got to pull back.
We've got an awfully long tunnel to get through before we get to the end.
Between now and vaccine distribution, there's certainly downside risk.
The risk reward there is not very good at all.
I would not be chasing stocks here.
Bob Dole would not be chasing stocks here. Let's cross over to Bloomberg's Abigail Dealittle. Hey, Abigail.
Hey there, John. Well, the question of capitulation, a great one, and relative to Goldman Sachs and Tesla, 605% later upgrading to a buy. So it really is the question of the moment. Are we seeing capitulation? That's on the institutional level. Relative to retail investors, if we take a look at what's happening for the AAI bears, down at levels seen in January. Now, this, of course, is often viewed as a contrarian call. So the fact that market, you have retail investors at the most bearish that they've been since January, ahead of course, the fireworks that we had starting in late February. Could be a sign that if it is capitulation to the upside, it may not last that long. In other words, there could be some bumps ahead. And if we go into the Bloomberg terminal, however, Ari Wald of Oppenheimer, who is an excellent technician, he's been correctly bullish. He's pointing out, though, the idea that we have high beta stocks such as Tesla causing a breakout for the high beta index above the 2000 highs. He says that this breakout's very convincing, so it's unlikely that any capitulation, that it is going to continue. And John, it's all about growth. At this point, over the last week, growth is outperforming value, so both sides of the equation winning.
Abigail, thank you. The Nasdaq record highs at the close yesterday. Can we add some weight to that rally this morning? The S&P 500 up by about 0.1%. Chris Harvey of Wells Fargo looking past some of the near-term risks, expecting the recovery to extend the recent rally in the small caps. He writes the following: we see scope for further absolute and relative performance opportunities within the group based on relative valuations, easier comps, and imminent COVID vaccine rollouts. Chris joins us now for more. So, Chris, the call, more of the same?
So more of the same. What we think is you're in a classic early recovery reinflation trade. And John, you know more about the fixed income markets than I do, but if you look at the curve, you look at the curve steepener that's happening, it's textbook, it's classic. You have an inversion. We had an inversion in 19. You have a recession. We had a recession in March. You have a recovery, and you have a multi-quarter, multi-year reinflation trade or steepening. And that's very positive for financials. That's very positive for small caps. That's very positive for the economy. And what we think is the economy is much stronger than many people think. Getting back to some of the other things that you were talking about, one of the things that we see is the momentum trade. A lot of people are piling into the momentum trade, but we think we're in the final days of that momentum trade. And the chart looks good. That's not what you want to do anymore. You really want to be a contrarian. The opportunities are more on the side of being a contrarian and things that haven't been picked over at this juncture.
Chris, what is a contrarian right now? What does that look like?
If I want to be flip, I'll say anything but tech. It's small caps. It's a high COVID beta. It's financials. It's your more economically sensitive names.
Really, after the month we've just had, is that contrarian now?
Well, if you look, small caps are at absolute and relatively historic valuations, right? Yes, small caps have bounced in recent days and recent months, right? We had a small cap trade. We talked about upgrading small cap back in, it was late spring, right? And they performed very, very well over the last couple of days. But if you look back over the last couple of years, they've been a significant underperformer. And so this is not just a 1 day, 1 month trade. There's a lot of scope for upward performance. And if I'm right, if we are in this early cycle, early recovery stage, reinflation trade, small caps are going to work. And it's a place that people just really haven't been.
Chris, it's the second time you talked about early stage, early recovery. You know far more about the equity market than me, so please help me understand. In an early stage, early part of the recovery, are multiples usually where they are right now?
So what I'm going to tell you, and I'll try and do it as succinctly as I can, this is an atypical type post-recession because the recession wasn't what we typically see. This was an exogenous shock running into the economy. This wasn't systematic risk imploding upon itself and everything closing. With regard to the valuation, these are the kind of valuations we see on the small cap side. These are not the type of valuations we see on the large cap side. And that's why we continue to push this small cap, economically sensitive trade, this higher COVID beta, and also financials.
Chris, next 3 months is going to be really uncomfortable. How uncomfortable do you think it's going to get?
It really depends on what happens on the 5th of January. 5th of January, the Dem sweep, what we think is going to happen is you'll have short-term euphoria, but it's something you want to rent, not something you want to own. Because the belief is that stimulus will be well over $2 trillion. But ultimately, you're going to have to pay the bill for that. That bill is going to come due probably in the second half of the year. You're going to have higher taxes, and ultimately, that's going to be bad. Now, if you have the Republicans hold on to 1 or 2 seats, I think you're right. We'll have a bit of back and forth. You have a lot of good news in the marketplace, and we're going to go to a place where we really have to find equilibrium. And what we think is some of these larger cap, uber cap names are going to come back in. It will weigh on the broader market. But if you're positioned in smaller caps, and this is not unlike the late 90s, early 2000, where you had where you can have a bull market in small caps, but a bear market in larger caps, it's something we'll have to deal with, and something that we haven't dealt with in a while. So it really depends on what occurs on the 5th and whether the GOP holds on to the Senate or not.
Chris, great to catch up. Should we do this again before year end? I think we should. We've got time. December's going to feel like a long, long month, I'm sure. Chris Harvey of Wells Fargo. Great to catch up, Chris. Let's head back to the market desk, get you some movers. Here's Abigail.
John, we've got some winners and laggards to take a look at, starting off with the stocks that are leading. Boeing is one of the best stocks for the S&P 500 on the news that they are getting that 737 MAX fleet back into the air. American Airlines and some of the other airline stocks higher on that news. To the downside, though, the banks are dragging this, of course, as yields come in ever so slightly after the 3-day backup for yields. Today, banks are close to the bottom for sectors, John.
Abigail, thank you. Coming up on this programme, Fed Chair Jay Powell and Treasury Secretary Stephen Mnuchin laying out their views for the economic recovery. More on that and the outlook for credit markets. Coming up next is JP Morgan's Meg McLennan, and we'll get you some economic data as well in about 5 minutes and at the top of the hour. This is Bloomberg.
So the reason we're interested in Post Office Rock is just the extreme nature of the erosion that is ongoing here. In the last, well, since 1940, it's eroded about 100 metres and in quite a unique fashion. By having a map of the seafloor and hopefully being able to capture some movement in these transverse dunes, we'll be able to see after the erosion where the sand is going and why it is not replenishing the coast as sometimes and most often happens.
With continued sea level rise and future climate change, we're just going to see much more of this kind of event taking place. So it's a good proxy of what we expect to take place much more commonly by 2050, 2100 than is currently the case.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I stated that America was in the midst of the fastest economic recovery from any crisis. I'm proud to say, while there is still a lot more work to be done, that statement is true. Americans are getting back to work. The unemployment rate has decreased to 6.9%, a rate not expected by the blue chip to be achieved until the fourth quarter of 2021.
The outlook for the economy is extraordinarily uncertain and will depend in large part on the success of efforts to keep the virus in check. A full economic recovery is unlikely until people are confident that it's safe to re-engage in a broad range of activities.
That was Treasury Secretary Stephen Mnuchin and Fed Chair Jay Powell painting two very different stories of the economic recovery. Another read on the economy just crossing the terminal in just a moment. We're awaiting the U.S. market PMI, the final read for the services sector and the composite as well. At the top of the hour, we'll be getting the ISM. That is an estimate of 55.8 for the services sector from a previous read of 56.6. And then tomorrow is Payrolls Friday. Median estimate 475, previous read 638. With that data, which crosses in about 5 seconds' time, Bloomberg's Michael McKee has the numbers. Hey, Mike.
Hey, John, we are standing by for news, as they say, with the market U.S. services PMI, and these are important because it's a service-based economy, is at 58.4 from 57.7. The composite PMI is at 58.6 from 57.9. So improvements in both of those, which would seem to be good news. Jobless claims fell significantly, 712,000. But remember, last week was a holiday week, so maybe we can't completely believe the numbers, John.
These numbers, though, the PMIs, Mike, you've got to be honest, going into year end, there's some real momentum, some resilience here that wasn't present for the UK, for Europe, when they were going into economic restrictions. Now, granted, these numbers will look worse in a month's time, given the restrictions we've just seen in California. But, Mike, you'd have to say at least there's momentum here compared to what we saw in Europe and Europe's experience.
Well, there is momentum. Does it start to fall off? And we also know that the market numbers come in higher usually than the ISM. So at the top of the hour, we'll see if that's ratified. But it does suggest that businesses in the U.S. still remain optimistic. And that was a feature of the Beige Book yesterday. Optimism, not a huge amount, a lot of uncertainty, but general optimism about the economy. And we heard Jay Powell say next year should be pretty good. Interestingly enough, we got the Bloomberg Consumer Comfort number out, 49.3. That's down just a little bit. But you look at what's happening in the political parties, and the Republicans are still a lot more comfortable with the economy than Democrats. 64.2 for Republicans, 41.5 for Democrats. We'll see if that changes when the administration changes.
Mike McKee, thank you. Mike will bring you that ISM at the top of the hour. So will Guy Johnson and Alex Steele in around about 15 minutes' time. Meg McLennan of JP Morgan Asset Management moving out the risk spectrum in search for yield, writing the following. We see compelling opportunity for less liquid portfolio allocations. There's significant opportunity for distressed debt, hybrid financing, and restructuring of companies experiencing temporary disruption that will rival or beat equity-like returns. Meg joins us now over the phone. Meg, do you see that appetite now drifting away then and back into, in a bigger way, into private markets?
Absolutely. So in a world where we've had unprecedented central bank and Fed support that's dampened market volatility, suppressed interest rates, and improved market liquidity conditions, those excess spreads will continue to compress, and you'll continue to see investors, as Lisa Coleman puts it, shifting seats from investment grade to high yield and from public fixed income into private fixed income to seek out those types of income and total return opportunities.
Love Lisa Coleman, Meg. Thanks for bringing her name up. Haven't spoken to her in a long, long time. Meg, can you add to this? If you're going to take a position in private markets and give up some of that liquidity, do you have to adjust your time horizon as well?
Yeah, so there's different types of vehicles that exist in the private market. So, really based on your risk and your liquidity preferences, you can look at a couple different types of asset classes. So two specifically that we like right now, without talking about the vehicles, are real estate debt, which we look at as a complement to public markets fixed income, pick up anywhere from 50 to 100 to 200 or 300 basis points, depending on the risk profile, for really high quality asset-based commercial real estate credits backed by, in a lot of cases, investment grade companies whose debt itself is trading at much tighter spreads than we are getting in the real estate debt markets and private space. And certainly similar true if you're looking at restructuring and special situations opportunities in companies that may have longer term restructuring needs. Absolutely, that's where you go for the longer term types of lockup and equity like types of returns.
Let's talk about these opportunities and whether they still exist, Meg, and clearly you think they do. It's amazing to me looking at public markets, seeing where CCC debt is right now, to see it tighter now than where it was before the pandemic. For me, Meg, it's just absolutely phenomenal. And I think for a lot of distressed debt investors, at least the ones that we heard about, there was a feeling that the opportunity was taken away from them because the Fed acted so quickly and things started to get a lift again. Are you saying that's not quite true outside of public markets, Meg?
So the opportunities remain idiosyncratic, and so where you really want to be focused is on companies that are experiencing what we think is a temporary disruption versus a value destruction. So that disruption is companies that may be associated with things like travel or vacation. We're thinking about one of those right now, where, you know, we think longer term as the world recovers and travelers recover, you've got a great story, but in the meantime, there's some liquidity issues and an inability to access public markets. So you will continue to see those types of opportunities, certainly not at the pace as there was in the first quarter. But again, as the pandemic continues to evolve in terms of the economic landscape, as we see volatility in the markets, you'll see opportunities pop up. And remember that even with default expectations coming down in public markets next year, they're still relatively elevated, and you are going to see capital solutions required.
Meg, you've captured that story in such wonderful, simple terms. It's disruption against disruption. Can you walk me through, and you've done quite nicely on the disruptive side of things, the destruction, the side of the market, the sectors that you'd actually steer clear of?
Yeah, so I think the way that I think about disruption versus destruction is what does the world look like when you rip off the economic Band-Aid? So if you were a company with the economic Band-Aid that needed it for a shorter term period to tide you over as the economy and consumers recover, that's going to be a great credit story longer term. The value destruction is really areas where you've had deeper problems pre-pandemic. These are places or assets that were experiencing structural decline. So if you think of examples in the public markets, the default rates in high yield have been concentrated in retail and consumer products, a lot of them with obsolete operating models, and the pandemic simply accelerated the demise of these companies. So that's where the value destruction will lie, and that's where you should look to steer clear right now.
Meg, great to catch up. Please come back soon. Enjoyed the conversation. Meg McClellan there of JP Morgan Asset Management. Let's turn back to the markets. Equities up by about 0.1%. The Nasdaq record highs, and we add some weight to those record highs with your sector price action. Here's Abigail.
John, not a lot of rhythm here to the sector action. Modestly risk on overall, in line with those record highs. If we go into the Bloomberg terminal and use the IMAP, we do have slightly more sectors trading higher at this point, but not huge gains. Real estate up top, so a bit of a cyclical tilt there. Industrials as well, up about 0.4% for both of those sectors. On bottom, utilities. That is true defense, down about 0.7%, but most sectors barely moving at this point. So investors, traders jockeying for position. Over the last 5 days, though, John, it is sort of interesting. We have a bit of a move back toward the stay-at-home defense or those high beta names. We have communication services up top, up about 3%. Then tech toward the bottom, both energy and materials. So it's going to be interesting to see whether or not the cyclical trade can gain more steam as December goes on. But this first week right now is favoring this year's stay-at-home and defense.
Abigail, thank you. Coming up, the market moving events you need to be watching. That'll be next in our trading diary. And look out for the ISM at the top of the hour from London and New York this morning. Good morning. Equities pushing higher. This is Bloomberg.
their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
The day ends in a Y. It means you've got a record high on the S&P 500, on the NASDAQ, up a third of 1%. The S&P 500 unchanged. I know I don't sound enthusiastic about this. There's just something very uncomfortable at seeing a market at a record high given what's happening with the pandemic in America. But that's been a challenge all year, to divorce how you feel about what is happening around you right now from your view on the market. And that's going to be the challenge maybe going into early 21 as well. Got at least another 3 months of it. Equities pushing higher on the NASDAQ by about a third of 1%. The S&P 500 slightly unchanged. Top of the hour, ISM services data coming out. Look out for that. A little bit later, the Senate resuming its consideration of Christopher Waller of the Fed Board of Governors. Look out for that too. Then on Friday, it is the main event. It is the US payrolls report to close out the week. That does it for us too. For our audience worldwide, this was the countdown to the open. I've enjoyed being with you. Thank you for joining me and the team on Bloomberg TV. Here's the price action. About 26 minutes into the session. Cross-asset worldwide. It's an equity market that builds on the recent gains. A treasury market that comes back a little bit. Yields higher over the last couple of days. An intriguing, curious move. And in the FX market, what's the pain threshold for Christine Lagarde and the ECB? Euro dollar 121.57. Just off the highs for 2020. The highs for 2020 coming earlier in the session. This was the countdown to the open. Catch me on Twitter for more at Fero TV. This is Bloomberg TV.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
Stop on profit for Japanese yen at 103.704.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, I mean, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located.
Position closed on Japanese yen at 103.704. So profit £200. For anybody who didn't follow my trades before, you can see that we purchased Japanese yen a couple of days ago. So basically we were still holding it because it's short position. Broker pays us overnight prices. So we was holding until basically the time was right, and we sold this position with profit. Okay?
Focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
There's a bear which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you,
millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
So there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
People think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends. But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start. From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it is widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia a regional power. Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
even though Putin denies any wrongdoing,
U.S. elections.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to us say, 24 people went for the job. 73 people accepted. I was the only guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统建设，这方面确实比你早。但是玩信息玩软的，中国人的脑袋绝不比你们长。我们在座的所有人的脑袋绝不比你们长。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma is an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.